Imagine this, you earn rupee 1 lakh per month. At the end of the month, your entire rupee 1 lakh lands in your bank account. No income tax deducted. No TDS. Sounds like a dream, right? Well, for thousands of young Indian professionals, this isn't a dream, it's their reality in places like Dubai. But is this glittering, tax-free promise truly the golden ticket it appears to be? For most of us, especially young professionals here in India, our salary slip often feels like a magic trick. You see a big number, then after deductions for provident fund, professional tax, and the biggest chunk income tax, the in-hand amount is significantly smaller. It's a constant battle to save, invest, and grow your wealth when a substantial portion is already spoken for. We work hard, we upskill, we negotiate, all to see a significant portion of our earnings go to taxes. This is why the idea of a tax-free salary from places like Dubai is incredibly seductive. It promises a faster path to financial freedom, more disposable income, and potentially a quicker way to hit those big financial goals: buying a home, funding your child's education, or retiring early. But like any major financial and life decision, you need to look beyond the shiny headline. This isn't just about saving tax. It's about making a strategic move for your entire financial future and career trajectory. Let's break down the primary appeal: the tax-free salary. In Dubai, and generally across the UAE, there is no personal income tax levied on salaries. This means whatever your employer pays you as your gross salary, that's almost entirely what you take home, barring any minor deductions your company might have for internal benefits. Contrast this with India's progressive income tax system. For a young professional earning, say, rupee 10 lakhs per annum, after standard deductions and factoring in investments under Section 80C, you're still looking at a significant tax liability. Let's take a simple example. If you earn rupee 10 lakhs per annum in India, under the old tax regime, after a standard deduction of rupee 50,000, and assuming you exhaust your rupee 1.5 lakh limit under Section 80C, your taxable income would be rupee 8 lakhs. This would put you in the 20% tax bracket, leading to a substantial tax outgo plus assess. Your effective in-hand salary, after all these deductions, including your EPF contributions, would be considerably less than rupee 83,333 per month. In Dubai, if you're offered a similar gross salary equivalent to rupee 10 lakhs per annum, or roughly 45,000 ED, UAE dirham, you'd essentially take home that entire amount. That's thousands of rupees more in your pocket every single month. This extra cash can dramatically accelerate your savings goals, allow for aggressive investments, or simply provide a higher quality of life. It's easy to see why this is such a powerful magnet for talent from India. While the tax-free salary is a huge draw, it's crucial to understand that tax-free doesn't mean cost-free. When you consider a move to Dubai, you need to look at the total financial picture and, critically, the long-term impact on your career. First, the cost of living in Dubai can be significantly higher than in most Indian cities. Rent, for instance, especially for good quality housing in desirable areas, can easily eat up a large portion of your increased take-home pay. Utilities, schooling for children, and even certain leisure activities can be more expensive. So, while you're saving on income tax, you might be spending more on basic necessities. This is where the mental discipline comes in. Don't just compare gross salaries, compare your net savings potential after all expenses. Then there's the career aspect. Is moving to Dubai a strategic step for your long-term career growth or just a short-term financial gain? You need to assess the job market in your specific industry and skill set. Are there ample opportunities for advancement? Will the experience you gain be transferable and valued if you decide to return to India or move to another global market? Sometimes, a move might offer a higher salary but pigeonhole you into a specific role or industry that limits future options. You also need to consider benefits. While Indian companies contribute to your EPF and might offer robust health insurance, in Dubai, these benefits can vary wildly between employers. Some might offer excellent packages, while others might leave you with significant out-of-pocket expenses for healthcare or retirement planning. This requires thorough due diligence, not just an impulsive decision based on the allure of a bigger number. So how do you make an informed decision about whether Dubai is the right move for you? It boils down to rigorous research, clear financial planning, and a deep understanding of your personal and professional goals. Firstly, research the actual cost of living for your specific lifestyle. Don't rely on averages. Look up apartment rents in areas you'd consider living, estimate your utility bills, grocery costs, and transportation. Use online calculators and talk to people who already live there. Secondly, evaluate the job market for your skills. Don't just accept the first offer. Understand the demand for your expertise, salary benchmarks for your experience level, and potential for career progression. Does this role align with your long-term career trajectory, or is it just a lateral move for more money? Thirdly, plan your finances meticulously. If you do end up with more disposable income, how will you invest it? Will you send money back to India? How will you manage your investments in India, stocks, mutual funds, real estate, while living abroad? What about your retirement planning? Will you miss out on EPF contributions? Consider setting up an NPS account or investing in other robust retirement vehicles. Remember, even while the Sensex might see a 1,000 point dip, and companies like Maruti Suzuki report a 6.5% fall in net profit for a quarter, the Indian market offers unique investment opportunities. You need a strategy to leverage your increased savings effectively wherever you are. Finally, and perhaps most importantly, reflect on your personal goals and values. Is the culture a good fit? What about family support, social life, and long-term residency options? A stoic approach here means focusing on what you can control, your research, your planning, and your intentional choices, rather than being swayed by external factors or the FOMO fear of missing out of others' shiny new lives. In conclusion, the promise of a tax-free salary in Dubai is powerful, offering a significant boost to your immediate finances. But true financial wisdom and career growth come from looking beyond the surface. It requires you to weigh the higher cost of living, assess the long-term career implications, and make a strategic financial plan. It's about making an informed decision that aligns with your unique financial goals, career aspirations, and personal values. What are your thoughts on moving abroad for career opportunities? Have you considered Dubai or perhaps another country? Share your insights and questions in the comments below. If you found this discussion helpful, make sure to hit that like button, share this video with a friend who might be contemplating a similar move, and subscribe to Mind and Money for more insights on building wealth, growing your career, and mastering your mindset.